Chapter 13. Budgeting and Budgetary Controls. Contents: 1. Purpose. 2. Budget. 3. The purposes of budget. 4. Methods of preparing budgets by government in Nigeria. 5. Zero-based budgeting technique (ZBB). 6. Planning, Programming and Budgeting System (PPBS). 7. Performance budgeting. 8. Periodic budgeting. 9. Flexible budgeting. 10. Capital expenditure budgeting. 11. Base estimate. 12. Rolling plan or continuous budget. 13. Factors militating against the budgeting system in the public sector. 14. Committed growth. 15. Procedure for preparation and approval of budgets. 16. Reserves / balances. 17. Supplementary estimates. 18. Uses of budgets. 19. Personnel cost budget. 20. Overhead cost budget. 21. Revenue budget. 22. Functions of the Ministry of Budget and Planning / Department Planning in the Presidency. 23. Budgetary control. 24. Cash budgeting. 25. Chapter review. 26. Worked example. Budgeting and budgetary controls. Purpose. After studying this chapter, the reader should be able to A. Define a budget and explain the different methods of preparing it. B. Describe budget implementation in the public sector. And C. Explain budgetary control measures. Introduction. A budget is a financial and/or quantitative statement prepared and approved prior to a defined period of time for the purpose of attaining a given objective. A budget is normally for a year. It is therefore a short-term plan. One of the primary objectives of budget is to measure the profit earnings of an organization. However, in the case of government, which is non-profit making, budgets are used A. As a guide for the present and future. B. To plan, control and estimate the amount to be received and spent during a specified period. C. To distribute limited resources. D. To motivate managers towards the achievement of corporate goals. E. As a means of evaluating performance. F. To inform managers about the results and operations of their responsibility domains. G. As a standard of measurement for the purpose of controlling ongoing economic endeavors. Government units that obtain revenue from taxes and other sources use such for current operations by means of budget. A government budget shows authorized appropriations and estimated revenue. Many, however, perceive the term budget as a restraining or impeding factor. Hence, people seem to develop a negative attitude to budgeting. The purposes of budget. In all government units, the executive arm prepares the budget and submits same to the legislative arm for review, modifications, and approval. The approved budget serves as a basis for the activities of that government unit for the fiscal period under focus. There are 4 main purposes which a government budget serves. This may be enumerated thus. A. A budget is an economic and financial document. It highlights government policies which are designed to promote economic growth, full employment, and enhance the quality of life of the citizenry. B. It is a useful guide for the allocation of available resources. C. Through the legislature, the executive arm uses the budget as a means of accountability for the money earlier entrusted and the appropriations newly approved. D. The budget stands for the request of the executive arm of government for the legislature to collect and disburse funds. Methods of preparing budgets by government in Nigeria. The budgeting approach used by government to allocate funds for a succeeding year is the incremental or line item method. The approach is oriented to expenditure, itemizing proposed disbursements under different heads and subheads of the various ministries and extra-ministerial departments. The expenditure side of the line item or incremental budget is made up of personal emoluments, other charges, and capital or developmental items. Traditional or line items or incremental budgeting. The traditional budgeting method, which is also often called incremental budgeting, involves picking last year's figures and adding a percentage to arrive at this year's budget. The percentage added is based essentially on three factors, namely A. Trend of economic events, B. Inflation, and C. The available funds. Budgeting in government can be appreciated as being made up of two main elements. The first aspect is the procedure of budgeting. This consists of the practices, documentations, and norms which govern the preparation, approval, implementation, and review of the budget. The second element is budgeting system. This has to do with the management process. This provides for the purchase, allocation, and use of available resources by setting in advanced operational criteria which result in the achievement of corporate goals. The line item budgeting system has certain features which include the following. A. The budget refers to the ministries and extra-ministerial departments for which they are prepared. No prominence is given to the ends for which the funds are provided. B. The current year's budget is arrived at through routine and incremental reasoning and not by scientific analysis. C. The main thrust of the budget is the achievement of control and accountability. Advantages of line item budgeting method. These include the following. A. It is simple to understand and operate. B. It suits the country's level of development where there is paucity of data. C. It is cheaper to produce. D. It encourages the continuity of projects. E. The method ensures that budget is translated in monetary language and relates to the relevant activity operations. F. Allocations into heads and subheads facilitate the monitoring of performance. Disadvantages of the line item budgeting method. Although the foregoing show the attributes of line item budgeting, the drawbacks of the method are: A. The method allows past errors to be carried forward. It is therefore not efficient in its operations. B. Detailed scrutiny is not contained in the budget. The budget preparation is consequently not well researched. C. It fails to clarify the cost of alternative methods of achieving programmed objectives. D. It results in continual growth budget totals leading to inflation as opposed to serious economic needs. E. It fails to fund new programs of high priority on a sufficiently reasonable scale. F. The method does not clearly spell out the relationship between capital and recurrent expenditure. The approach is based on organizational setups rather than programs. Zero-based budgeting technique, ZBB. It is a management effort which provides for systematic consideration of all activities and programs. The zero-based budgeting technique is a program budgeting reform that was introduced by Peter Pear of Texas was popularized by past President of the United States of America, Jimmy Carter, in 1976. The technique requires every item of expenditure to be justified as if the particular activity or program is taken up for the first time. It is the preparation of operating budgets from a zero base of expenditure cost. Under this technique, resources are not necessarily allocated in accordance with the previous patterns. Each item of expenditure proposed has to be annually rejustified. Zero-based budgeting seeks to avoid perpetuating obsolete expenditure items. In government, the three key users of the zero-based technique are A. The legislature, B. the executive, C. the various ministries, extra-ministerial departments, and parastatals. The legislature is more concerned with shifting emphasis on issues of objectives and priorities. Ministries and extra-ministerial departments require adequate information to focus on implementation and efficiency. Zero-based budgeting involves the use of decision package approach based on the identification of activities, which may be classified into the following 5 basic events. A. Identification of decision units and formulating operational plans. The entire ministry or parastatal is divided into smaller components called decision units. B. Analyzing the whole budget into decision packages based on the decision units, to which costs are assigned and to the alternative ways of executing the same operation. It also involves assessing the effect of not performing the activity at all. Different levels of performance between the minimum and maximum points are evaluated so as to obtain optimality. Ranking in priority the decision packages covering the activities, both new and existing, in a competitive manner. D. Determination of the cutoff point, to choose the packages which can be included and those to be rejected. E. Prioritization of the packages, to highlight the ones which will fit in with the available resources. Advantages of zero-based budgeting. The following advantages have been associated with the use of zero-based budgeting. A. It acts as a tool for change from which benefits are likely to accrue. B. It allows for optimum allocation of resources. This is made possible by the formation of alternative courses of action and evaluating each on its own merit. Resources are therefore allocated by need and merit accruing rather than political or emotional considerations. C. It creates questioning attitude, so instead of assuming that current practice maximizes expected money value, wasteful spending is thereby reduced. D. It provides a better yardstick for the measurement of performance. E. The technique allows for the participation of the various organs of the decision unit. F. It focuses attention on the future rather than the past. Old and new projects are therefore appraised on the same basis. G. Under zero-based budgeting, important projects can continue to receive funds owing to their viability. H. It is good for profit-oriented projects. Disadvantages or problems of zero-based budgeting. The following are the disadvantages of using zero-based budgeting. A. Lack of and sometimes unreliable data may inhibit or undermine the usefulness of the approach in the less developed economic environment as ours. B. It may cause a major shift in resource allocation. C. Bureaucrats often do not trust the approach and hence frustrate its effectiveness. D. In determining decision packages, there is sometimes the problem of fixing the minimum level of expenditure. E. It involves the task of analyzing and ranking a lot of data and information which a number of civil servants find difficult to manage. This situation is further complicated by lack of qualified and competent personnel in the public sector to handle the application of this technique. F. There is need to make accounting structure conform to the zero-based philosophy for the purpose of evaluation and control. This may necessitate a general view, overhauling, adding or scrapping of activities and functions. G. It is not so good for recurrent expenditure. It has been successful in the public sector. Planning, Programming and Budgeting System (PPBS). The Chartered Institute of Public Finance and Accountancy defines planning, programming and budgeting system as primarily a system associated with corporate management which identifies alternative policies, presents the implications of their adoption, and provides for the efficient control of those policies chosen. It embraces several established concepts and analytical techniques within the framework of a systematic approach to decision-making, planning, management, and control. The principal features of planning, programming, and budgeting system are that it relates to objectives and outputs as it emphasizes the choice. Planning, programming, and budgeting system is a budgeting approach which is based on systems theory, output and objective orientation with substantial emphasis on resource allocation on the principle of economic analysis. The technique is not based on the traditional organizational structure, but on programs which involve grouping of activities which have common objectives. The resources which are available to public sector organizations are limited when compared with the demands for them. Consequently, choices have to be made to make sure that the merged resources are distributed fairly to maximize benefits. The main steps in planning, programming, and budgeting system. A. Identification and enumeration of goals and objectives of the organization. B. Defining the total system in detail, including objectives, environment, available resources, the programs, and their objectives, etc. C. Planning and analysis. This involves continuous process of developing, comparing and analyzing alternative programs so as to evolve the most important appropriate package for the organization. D. Development of the appropriate measures of performance for the programs of the organization. E. Programming and budgeting. The agreed package of programs, complete with resource requirements and expected results, are expressed in the form of programmed budgets. F. Reporting and controlling. Planning, programming, and budgeting system requires sophisticated information service which is able to monitor the progress made towards meeting the organizational objectives. Performance evaluation therefore emphasizes the attainment or non-attainment of the desired objectives, rather than the amount spent, which is the focus in traditional budgeting system. G. Development each year of a multi-year program and financial plan. Advantages of planning, programming, and budgeting system. The technique. A. Provides information on the objectives of the organization. B. Lays emphasis on long-term effects. C. Achieves effective use of budgeted resources and anticipated performance. D. Ensures rational decision-making and forces those seeking budgetary allocations to consider alternatives. E. Leads to rapid economic development. Disadvantages of planning, programming, and budgeting system. The system is associated with the following disadvantages or problems. A. Natural resistance to change, particularly among the very senior officers in the governmental hierarchy. B. Transitional problems at the introductory stage. C. Problem of staff shortage. D. Paucity of data. E. Reorientation of the old accounting system to cater for the requirements of the new concept. F. Problem of data collection and physical monitoring. G. It is difficult to install. H. It makes heavy demand on resources.